So your pick of the week this week is Citigroup, ticker symbol C, a banking institution which theoretically should benefit from rate cuts. Is that am I right there or no? Maybe.
Banks, to be honest, when there's high interest rates, banks make money in a very traditional way because they make a difference on the spreads on the interest rates. And when interest rates are low, their spreads get small. So they have to think of other ways, fees and stuff like that. But the truth is Citigroup is one of those too big to fail banks. And, they're at the top of their channel that they established back in July. And I'm looking for an opportunity to do, again, I'm thinking short duration here, folks, like, a month, not more than a month. If it goes more than a month, great, right? But right now I'm just thinking for the month of October. And I'm looking at an opportunity to short some Citigroup. It's been at this top for about 2 coming on 3 weeks. And we keep getting these signals that a top has been found, but we don't get the follow through. We're not getting that follow through on the trading day to say, let's place this trade. So I'm still waiting for that follow through to materialize, but I'm looking to short some Citigroup. Or if I don't want to short some Citigroup, there's an alternative. And Sip, do you mind if I demonstrate on our options lookup tool how to quickly find an alternative?
I'll go ahead and throw the link in the chat as well. If anybody wants to get access to, the tool that AJ's awesome team has just released and is updating.
Yeah. So I'm just logging into our members only web portal here. And you can see as I scroll down here, we've got our options lookup tool, accurate data, confident moves, right? So all you have to do to find a good stock replacement, you type in the ticker symbol. You're going to want to look at all the different options, and you're going to want to look at the price components. So when I look for a substitute option for a stock, first of all, I want to go pretty far out in time. I definitely want to go way past how long I think the trade will last. And yes, I know I've been talking about, let's just go for a month. But I for a substitute, I kind of want to go 8 months or more. And so Citigroup's a pretty popular stock. It's going to have a lot of liquidity. So I'm looking at the June 20th, 2025 option, right? And now I want to make money if the underlying symbol goes down. So I'm going to look over here at the put column. And, I checked that box up at the top that said price components. So the price components are going to give me the percentage of extrinsic value. They're going to give me the percentage of intrinsic value, as well as the, actual hard numbers of intrinsic and extrinsic value. But I'm just going to look at this extrinsic value number because if I want a stock replacement, listen closely, I want to minimize extrinsic value. So basically, I'm going to scroll down my puts. I'm going to find the ones that are in the money. And you'll notice that as I go deeper in the money, that extrinsic value gets less and less. The most ideal options would be under 5% extrinsic value. But I also want to take a look at liquidity, evaluate open interest, evaluate volume, and most importantly, evaluate the bid-ask spread. And although this is, for an option that's going to be a substitute to a stock, this 40-cent bid-ask spread ain't that bad. I kind of am, feeling more love over here on the $75 put. It's got a little bit more extrinsic value component, but the bid-ask spread is 20 cents. There's a little bit more open interest. I'm feeling a little bit more comfortable as that stock replacement with that $75 put. So if I don't want to be shorting the stock, maybe I don't have a margin account. I can't short. And I'd rather just buy something that's going to make money as Citigroup goes down. Here's the put for you, right? A June 2025 $75 put. This is going to be your safest bet. It's going to basically move dollar for dollar. So if the stock goes down $1, this put is going to increase in value by $1. It's going to be linked almost dollar for dollar, just going in the opposite direction. So if you buy this put and the stock goes down $2, your put will go up $2, but it's at a fraction of the price. Citigroup is trading at like $60. This is where leverage and options goes on. Citigroup, if we scroll back to the top, it's trading at $61, right? But this thing is only $14.80. So you're going to get the power of owning something that costs $61 for only $14.80, basically a fourth of the price, and it's going to still move. So, we want to make sure we wait for that signal on Citigroup, and then we want to go ahead and play it on the way down. And then I'm not as concerned, again, only aiming for like a month trade. I'm not as concerned at bottoming out before I actually sell my put premium and buy a protective call. Basically put that whole strategy in place. Instead, I just want to get some delta. I want to feel comfortable about, and I don't mean options delta. I mean difference between where I start the strategy and then finish the strategy, do the other leg. I just want to get some distance between that price. And if I'm down here below the center channel, it's not as important to me to actually get it to bottom out because I'm not thinking of the longevity of this trade. I just want to get high rewards at low risk. And that's what I can do by doing this. And the only other thought I could think of is if this is all too expensive for you, even that $14 price tag, you could also think about, especially when we get that signal, putting a vertical spread on the top of this, a bear vertical spread, and just know that size that accordingly because vertical spreads can quickly go from a profiting position to a complete loss. So size that appropriately. Don't use too much of your portfolio into vertical spreads. And if you're part of my program, you know exactly how to calculate the risk and how to go and determine position sizing. Do that